This is Adrian Larson, President of Pathlight Investors, here with your Pathlight Insight. My, what a difference a month makes. Last month MJ came on and told you about one of the worst starts in equity market history for Wall Street. And here we are now in the middle of March, and apparently things are all rosy again. The S&P 500 was down roughly 10.5% through February 11th of this year. Again, one of the worst starts in its history. But since that February 11th time frame, we've now had a 10% rally to get to the point where we're almost flat for the year. So basically just where we started on 12/31 of 2015. Now, a couple of things have happened in that time, right? You might remember oil was down roughly 37% through that February 11th time period as well, bringing everything else down as we kind of feared economic slowdown on a global basis. But we've since had a roughly 44% rally in the price of crude oil, which has allowed people to finally, I guess, breathe a sigh of relief that maybe we aren't in that global recession. Second, on that February 11th day, the CEO of JP Chase, Jamie Dimon, decided that he was going to put his money where his mouth was, and he spent $26.6 million to purchase JP stock. Now this is a buy that you would think would inspire confidence, and that's exactly what it did. Financial stocks rallied and most of the equity market rallied as well. We've also had better economic data. Now we feared that the US was slipping into a recession, and we were unavoidably going to fall into recession at the beginning of this year. But the data in February has been better. The jobs data continued to be strong, as we saw in the February report, which came out the first week of March. And those fears of a recession, at least in the US, have subsided a great deal. Now what we're telling you all about this is because things can change drastically, and they can change in the near term, and they can get wild and crazy in that short term period. But what we have to do is to continue to look at the long term. Try and tune out that noise that's going on, because at the end of the day, the data will continue to win out. And as long as we aren't slipping into recession, stocks have the ability and the chance to go higher. Now, as we kind of look into the crystal ball and peer into the future, the next disaster that's going to come up and affect the markets is this 2016 election. And really all it is going to be now that Donald Trump is the front runner is headlines about how terrible he's going to be for the economy in the financial news. So get ready for it. Prepare yourself for it. The volatility is going to be with us for quite a while during 2016 until we get to that point where we've passed the election and ultimately have solid economic footing. We're going to experience these large gyrations in the market. But again, we have to look for the long term and look at those opportunities as buying opportunities when stocks sell off. If you have any questions or want to talk about anything, please don't hesitate to give us a call. Take care.